Right, we're back with Shezando Karasu.
Correct.
Who is making his debut on TIP TV, international debut as we say here.
Global.
And you are an external journalist for ActivTrader.
That's right.
And you've just told us that you actually you watched the first appearance by, was it your boss, is it, who was on?
He's not my boss, no, but he's a floor manager at ActivTrader.
Okay, all right. Well, so a second appearance for ActivTrader on the show, and my co-host here, Bill Hubbard, Chief Economist for Bullion Capital, will be helping me out, I hope. On
of course I will.
The Thanksgiving cheer.
Exactly right.
Right, on the agenda today, as we get towards December, are we on the cusp of the great unknown? I presume you mean in the financial markets?
With respect to divergence from the big transatlantic central banks, yeah.
Right. And I mean, I think we've had guest after guest on the show sort of giving their pronouncements about what the Fed's going to do, and you know, the hawkish argument and the dovish argument, they come in, they're equally certain of their own angle, and we still seem to be totally divided in terms of what the Fed are going to do, and because of that, we seem to be in the great unknown in terms of everything else as well. Then,
indeed, I mean, there's been a lot of discordance on this. This has been I would say, the major talking point over the last, well, however long you'd care to go back, really. But yeah, I mean, it's been a perennial discussion point. I'd say it's really the key issue currently.
And how important? I mean, that's the other thing. For people who active trades, for people actually trading, how much of a difference is this making? Do you think? Because you have the macro argument sort of in the air somewhere, but the actual price action doesn't really seem to be related to that.
I think the macro bubble.
Yeah, the macro bubble. Yes.
Well, I mean, the key point I wanted to discuss this week was with relation to divergence. What the ECB is going to do next week, and then the Fed 2 weeks later. It's been part and parcel of the commentary in the FX markets now for a very long time. I think the inflationary pressures on Europe and in the US are very different, because in the US, the output gap is really closed. They've got 5% unemployment rate, which is pretty much full employment. So there's no inflationary pressure in the US, whereas in the UK it is being dragged down. The mandate is to get to 2%. We're nowhere near that. So yeah, I mean, it's very likely that next week the ECB will begin to ease, and obviously all of the other monetary policy they're going to put in place with the asset buying purchase program. They may extend that. They're going to use some other alternative methods to begin to inject more liquidity into the market. There's a debate also about how effective that is. But yeah, I mean, that's really going to be the interesting thing. It's because I think the key dynamic really between the two economies is how everyone thought that as interest rates in the US would go up, that would pull up the dollar. But what we're seeing now is a kind of more of an interplay with downward pressure on the ECB and downward pressure in the Eurozone, as opposed to what's happening in the UK. So there's I think that's going to be quite a shock to the markets.
So even though...
When you say a shock or a wake-up call?
Well, it's just, we've not really seen that level of divergence from the ECB. I mean, normally these two big entities are in concert. So, I think this is the major sort of structural...
But you say, well, you know as well as I do, I mean, probably the most expensive cost for any central bank is their telephone calls to each other. The feeling is that we all know that the Federal Reserve is going to raise rates in December. But now, again, with the dollar not taking off, although we did see the DAX, I mean, the dollar index yesterday above 100.
Yeah, the DAX had a little spike.
Yes, the feeling, though, that the Federal Reserve, if, as we all know, the ECB is very, very dovish next week, then then the Federal Reserve basically said, yes, one and crawling, as Stanley Fischer says, rather than one and done. Because, I mean, I feel we'll get one in March and one in December. I mean, Goldman Sachs came out earlier this week feeling we'll get one in December and 4 rate hikes next year, and is still calling parity for year-end by the euro, which is quite a hawkish statement.
I think they'll probably in March and June, and then they'll take a view on it at that point. That seems to be the feeling. Because they say, I mean, they just want to ensure that there's no non-linearity, no sort of shocks down the road. We'll see what happens. But yeah, I mean, look, there's a huge amount of discord, I think, in the FOMC. There's been some dissenting voices from what Yellen wants to do, particularly Mrs. Bayer. She's been quite sort of, there's almost been like a mutiny. There's a big discussion as well as to whether their communication strategy has been.
But then I guess I'm going to show my age. I mean, I remember years gone by when we had intermeeting moves. If we were around in September 1992, when we were blown out of the ERM, we had 3 rate hikes, and then the 4th move that afternoon was back to where we started. I think it was the best day Evening Standard ever had. So, I mean, we got people in this marketplace who have never even seen a rate hike.
Well, true. I mean, there's not been one in 10 years. I mean, I was at school in 92.
Yes, okay.
So. But
I'm not trying to be frivolous, but I mean, this is definitely the new normal. Because, I mean, I remember intermeeting rate decisions by both the Bank of England and the Federal Reserve from years ago when we did have real inflation.
Well, I mean, we're in uncharted territory. They've been at a lower bound zero for a long, long time. Yes. There's even talk of ECB even going into negative territory like they've done in Sweden and Norway and Switzerland.
Yes.
So, we live in interesting times.
Yeah, but I mean, isn't there still, I mean, the situation you talk about, sort of the negative interest rates, isn't it at some point very soon somebody's going to say, look, this strategy, the post-financial crisis strategy just hasn't worked. It's been a disaster. It didn't work for the Japanese, and all we did in 2007-8 was copy their failed strategy, which was known to be a failed approach then. We were going to have an extended period of flat growth and deflation and all sorts of asset bubbles, random asset bubbles. It's just all over the place.
Yeah.
And I mean, doesn't that sort of really bring us back to the issue now that really the central banks were founded 100, 200 years ago, and they've got no real relevance to the way the financial markets move now?
Well, I mean, look, there's another debate as to how receptive the markets are to what they say. Who's actually pulling the cart, really. Can you just rephrase your question specifically?
Well, no, I mean, it was more of a sort of a rhetorical question, really, that just, I mean, the process seems to have been, especially with the run-up to this December rate hike that we're getting, painful and confusing, and the communication strategy wrong, rather like Mark Carney's led strategy as well, just all over the place. I mean, you sort of wonder why there's the Bank of England and why there is a central, Bank of England governor, because it's something that the Chancellor could have just done himself as part of his sort of daily duties. He could have done it yesterday. Just said, we're going to, he could have said, the purpose of these institutions seems to be quite questionable now, or the function.
But what you're saying, I mean, Chairman Greenspan said this 30-odd years ago, that you, the market, decide the rates. All we do is act and react, okay? But I mean, again, you had Chairman Greenspan or Bernanke or people over here, Eddie George and stuff. It seemed like we had more power brokers, who Mr. Greenspan would let everybody talk, and then he said, okay, here is the decision. I'm sure Eddie George said the same thing. But now it's sort of, Janet Yellen's probably out getting a cup of tea when they do the voting.
Well, I mean, it's questionable as to how kind of pathetic they can be. I mean...
Did you say pathetic? Oh, sorry.
Yeah. I mean, I think J. Galbraith said famously, the purpose of economic forecasters is to give astrologers a good name.
And for us to be able to keep our job.
Yeah. So, it's questionable as to how much they actually know. I mean, they react to events. They try to predict them as much as possible. I mean, look, we saw with the autumn statement yesterday, with the OBR suddenly giving the Chancellor an extra £27 billion Christmas present. I don't think they would have known that.
And as the BBC asked him, he said, why? He said, that's why we have to update our reports on a regular basis, okay? And you know as well as I do, I mean, and you see it like with the inflation numbers. How many times have they adjusted them over the last 10 years? I mean, 10 years ago, they didn't even have computer purchases, okay, as a part of their CPI numbers.
Well, yeah, I mean, look, there's headline and core inflation, isn't there? In the UK, I mean, in the Eurozone, what's dragging it down is, obviously the oil price has fallen through the floor. So that's having a big deflationary, effect on on core inflation. But yeah, I mean, as I say, you know, a lot of it is just reading the runes. You know, if you put 10 economists in a room, you're going to get 10 different opinions.
20.
Right, well, on that happy note, Shazanda Karasio, external journalist for ActivTrader, thanks very much for coming today. Excellent debut. Hope you come back and give us some of your wisdom again.
Thank you very much for having me on the show.
We'll be back after the break.